Welcome back. We're still under pressure for the markets, so the Nifty down around 54 odd points. We have the Sensex down over 200 odd points. Good time then to discuss the fundamentals. We have Nischal Maheshwari, CEO of Institutional Equities and Advisory at Centrum Broking, who joins in on the show now. Nischal, hi, welcome to the show. I was wondering what to start this conversation with you about. Should I start, talking about Iran, or should I start talking about the mid-cap market on our hands? What do you think is probably going to be a bigger risk, say, in the next 1 or 2 months?
Hi, morning, Ekta. I missed your question actually. I think the voice is coming a bit slow out here.
Okay. I'm just going to narrow it down and ask you about this entire US-Iran tension. We have crude prices which have spiked up to $64 per barrel. Do you think that that's probably going to escalate and that's becoming a bigger risk for our markets now?
So, yes, I think Iran is a point of concern, but I think that may be for a small point of time. But I think the bigger issue still remains to be domestic liquidity and the slowing growth, and I don't see that easing out in a hurry. I think those are big issues basically which needs to get sorted out. I think Iran, these kind of political explosions will happen basically, and it will be just for a short period of time. Yes, you will have a lot of volatility around that.
Okay. Nischal, the big thing that we're dealing with here locally is in a way skepticism and lack of trust with regards to the asset side of things for most financials, right? I mean, it's not liquidity anymore. It's not liabilities, but it is assets for a bunch of these names. And I'm actually referring to a couple of banks as well. And not just Yes Bank. I mean, even something like an IndusInd. Where are we at, according to you, in terms of, are we still at, are we closer to some sort of a resolution? I'm talking about, market kind of sort of saying, okay, a bunch of this bad news is in the price. Are we midway or are we at the beginning?
So as far as NBFCs is concerned, Prashant, I think so that we are still midway. I think that still needs to get sorted out. I'm not worried about the bank's asset quality. I'm more worried about the NBFC asset quality. And because banks have got limited exposure as far as real estate is concerned. It's the NBFCs which have huge exposure, and given that they have a much smaller book, that's a bigger concern for them. Now, in turn, collateral damage, I think because of some NBFC having a problem, that collateral damage may damage the banks also. Because but I'm more worried on the NBFC front, given that the real estate is a question mark.
Bulk of the NBFC borrowing is from banks, so ultimately banks are on the hook, one way or the other.
Yes, I agree basically, and that's why I'm saying so collateral damage may happen basically to banks, but given that most of the banks in NBFC space also should be around 4 to 5% of their book basically. So overall, yes, you will have a hit, but it will not be a big hit because the larger NBFC still, so the bigger borrowers, if you really look at it from NBFC space, is still HDFC Limited and Bajaj Finance because they have got large books. The others basically are still relatively smaller, so it may not impact much on the bank side, but it will have a much bigger impact basically on the NBFC side.
Do you mean NBFCs, Nischal, or housing finance companies? I mean, who lend to for housing loans and
I think so. NBFCs also basically.
Yeah.
So NBFCs also, because most of the NBFCs have a large exposure onto the real estate side, and that is where what worries me the most.
So Nischal, according to you, how big a problem do you think the real estate space could be? Because a lot of the NBFCs and banks probably have provided for a lot of these exposures as well. Case in point would be something like an Indiabulls Housing, who said that they've completely provided for Supertech last quarter itself. What is your sense in terms of how much of a problem real estate could be at these levels and how much is provided for?
So it's a very difficult guess to make basically, but I think somewhere around 40 to 50% provision has been made. I don't think so. We are as yet made the whole provision and it's done and dusted. So I think as this turmoil continues and more liquidity conditions just becomes more difficult. You've just seen Loda being rumored that there is an issue around Loda now. It's a large builder basically who has just come up for an issue now. So I don't think so we are past this crisis and everybody seems to have provided for it. So I think we are just halfway there.
Okay. The other big worry about the markets is about what's happening with the entire mid-cap space. We've spoken real estate, NBFC, maybe even mid-cap banks to a certain extent, but the Eros's of the world, the McLeod Russells of the world, the Jets of the world, all of these stocks which have seen significant pressure. Nischal, how do you approach it?
So I think Jet and all is now done and that's gone basically. There's nothing to do about them. But there are spaces within the NBFC basically which one can approach, especially which has got a good demand outlook. And I believe one of the spaces you can look at is construction, the EPC guys, where they've got very strong order books coming in largely because the government is the main provider there. And government has been spending and we have the same government coming in for a second term and I don't think the policies will change. So you have a very strong order books for most of these EPC companies. So I think that is one space one can look at. Again, I think given that most of these guys are going to use a lot of cement, so I think cement is another space basically which seems to be looking good at this moment. I think partially you should start looking at some consumption names also which has got beaten down, or some partially maybe some autos also. I think that could be another one to look at in the mid-cap space.
Okay, fair enough. Nischal, we'll leave it there. Thank you very much for coming on. Appreciate you joining in with that perspective on the market. Quick one there. We'll take a very quick break here. We are back.